Hello and welcome guys, and welcome to this short vlog. And yes, in this particular vlog we are going to discuss the most important amendments which have come by in the Finance Act 2024 and how are they applicable on June and December 25 students. So yes, this video is really useful for all those students who are going to give their examination in either June 25 term or December 25 term. Yes, I'm going to cover both direct tax and indirect tax amendments in this particular video. So I'll start with the direct tax amendment. At the very outset, the new tax regime or the default tax regime, which has come by recently in the recent years, tax rates, the slab rates have changed for that. Okay. So the earlier slab rates for 115 BAC, the new tax regime or the default tax regime were up to 3 lakhs, nil, 3 lakh to 6 lakh, 5%, 6 lakh to 9 lakh, 10%, 9 lakh to 12 lakh, 15%, 12 to 15, 20, above 15 lakh, 30%. Now, the new rates which are applicable for new tax regime have been amended. Okay, and now let me tell you a very important thing at this point in time. Both old tax regime and new tax regime are applicable for June 25 and December 25 students. Both of them are applicable. Okay. Now, question is going to give you or going to instruct you which tax regime do you have to follow, but you have to study both. And for all the students who have taken coaching from me, guys, chapter number 1 of your direct taxation syllabus covers the old tax regime, and chapter number 15, which is assessment of various persons, covers the new tax regime. So both these tax regimes have been given in two different chapters. Yes, in chapter number 15, I've done a detailed comparison of the old tax regime and new tax regime, and how can you choose the beneficial tax regime. That discussion is also done in chapter number 15. So all the students are advised to study both these chapters to gain a complete understanding of the old tax regime as well as the new tax regime. Now, the new tax regime, the tax rates have changed. The slabs actually have changed. 3 lakh to 7 lakh instead of 6 lakh. Earlier it was 6 lakhs. Now it is 7 lakhs. 7 lakh to 10 lakhs. 10 lakh to 12 lakhs. Then last two are same, 12 lakh to 15 lakh, 15 lakh and above. These two remain the same. So there's an amendment in the middle three slab rates which are there in the new tax regime. So this is one of the most important amendment which has come by. Rebate under the new tax regime is available up to rupees 7 lakhs. Standard deduction is available in the new tax regime, but deduction for entertainment allowance is not available, and professional tax is also not available. This is not a recent amendment. This was there in the earlier year as well. Very important, the company tax rate, which is 25%. If you want to take a beneficial tax rate of 25%, then your 2 years prior turnover should be seen. Okay, so earlier turnover of 21-22 was required to be seen. It should be less than or equal to 400 crores. Now 20 to 23 turnover is required to be seen, which should be less than 400 crores. That is the amendment. And of course, this is a very obvious amendment which is there. So 21, 22. Earlier it was 21-22, now it's 22-23. A very important amendment for foreign company tax rate. For foreign company, earlier the SAT tax rate was 40%. Now it is 35%. So that is a change in the company tax rate in case of a foreign company. Okay, so then we come on to certain important amendments in case of PGBP chapter. So guys, in case of PGBP chapter, remuneration of partner in case of assessment of partnership firm, okay, where we used to compute the eligible, allowable remuneration which was required to be given to the partners. And all of you might remember that if the remuneration is not given in the deed, then it's totally disallowed. But if it is given in the deed, then it cannot be more than the specified limits. These specified limits have undergone a change. So earlier the limit was on first 3 lakhs of the book profit, 1,50,000 or 90% of the book profit, whichever is higher. On balance book profit, 60%. On book loss, 1,50,000. The revised limit is on first 6 lakhs. So from 3 lakhs, the limit has increased to 6 lakhs of book profit. It should be 3 lakh or 90% of book profit. On balance book profit, 60%. And on book loss, there is a provision for remuneration of 3 lakh rupees. So the limits have considerably increased in the last budget. Now we come on to the capital gains, and yes, in capital gains there's a major change which has happened in computation with respect to the long-term capital gains. Tax rates have rejigged completely. So yes, a major amendment coming in the capital gain chapter. So first of all, CII 348 and the current year's CII is 363. Of course, in the examination, most likely you will be given the CIIs, but it's always preferable to remember the last year's CII. All right, sir. Now, there is a change in the period of holding test which was applied earlier. Earlier, there were 3 slabs which told you what kind of asset is long term and what kind of asset is short term. So 3 benchmarks were there: 12 months, 24 months, 36 months. Now, amendment has taken place and there are only 2 months which are to be considered, which is 12 months and 24 months. 36 months bracket has been removed, which means that the last 2 brackets, the last 2 limits have been consolidated. So these 2 limits have been consolidated. Now there is no 36 months. The unlisted equity shares, preference shares, immovable property, and any other asset is covered under 24 months, and securities, zero coupon bonds, equity oriented mutual funds, they are covered under the 12 months criteria. So now there is no 36 months criteria. The assets will turn long term soon as they cross 24 months in case they fall under this particular category. So this is the limit of the bifurcation which is given in the current law. Now we come on to the tax rates. Yes, tax rates have changed substantially, both short term and long term, and you really need to understand what is the difference in the tax rates, the earlier tax rates and the new tax rates. Okay, now for this I'll refer to the chart. I have summarized the tax rates in this particular chart, so I'll show you the okay. If we talk about short-term capital gain, short-term capital gain is divided into 2 parts. One, the short-term capital gain which is covered under section 111A, which belongs to securities which are STT paid, transfer in foreign currency, in recognized stock exchange, in IFSC, etc. Now, in this particular case, earlier the tax rate was 15%. Now it has been increased to 20%. For other assets or securities, now the earlier tax rate was the usual rates which are applicable, which is the slab rate in case of individuals and the respective rates in case of other entities. It is the same. So the change has come by in this particular rate. Instead of 15%, now it has been increased to 20%. That is how the STT, the short-term capital gain, is taxed now. Now we come on to the long-term capital gain, and yes, a major change which has come by in long-term capital gain, guys. The concept of indexation has been limited to a very small proportion of assets. Yes, indexation benefit has been curtailed. Indexation benefit has been reduced to a very specific kind of a transaction. Otherwise, indexation has been amended. It has been eradicated from Income Tax Act. Now, concept of indexation has been actually removed from the Income Tax Act, and that is what is explained in this particular chart. Alright, if we talk about long-term capital gains, we'll divide our discussion into securities and other assets, and that one asset in which indexation is still prevalent. It's an exception. It's a carve out. Okay, so if we talk about the usual securities, okay, securities can be bifurcated into 2 parts: section 112, special securities, and other securities. Okay, in both the cases, be it special security, which is 112A, or other securities, the tax rate is constant, 12.5%. Then, sir, why the bifurcation? Why do we call certain securities as 112A securities and other securities as other securities, guys? Because still there is a no tax limit, the exemption limit. Earlier it was 1 lakh rupees for these specified securities. Now it has risen to 1.25 lakh rupees. There's another amendment which has taken place. Okay, so for specified securities, which is section 112A securities, we have to give an exemption of 1.25 lakhs in the short-term capital gain, and over 1.25 lakhs, we'll charge tax rate of 12.5%. What are these specified securities? They are equity shares which are listed in recognized stock exchange, equity oriented mutual funds, and units of business trust. For them, the exemption limit is 1.25 lakhs. It has risen from 1 lakh to 1.25 lakhs. And for other securities, the tax rate is 12.5% without any exemption. This exemption of 1.25 lakh is only applicable to 112A securities. All right, sir. For any other kind of asset, yes, for any other and every other kind of asset, without any indexation, 12.5% rate is there. So, but this is a huge loss to us. I understand that it's a huge loss to you, but the tax rate has also substantially declined. From 20% earlier, it has declined to 12.5%. So although indexation will pose a threat towards us, but 12.5% definitely will give us a respite. So it will balance out the loss which the assessee will have. And still, there are certain class of assets for which that indexation benefits is still applicable at the option of the taxpayer. What are those assets? We are going to see now. Okay. Now, this is a case of land and building or both. No other asset. Okay. Indexation is not there in any other asset. It's only in case of the specified asset which we are talking about. Okay. Let's write over here no indexation. Okay. Indexation benefit is not there. So no indexation in this particular category of assets. So I'll give a generic rule that no indexation for these kind of category of assets. Okay. So for this category, no indexation benefit is available. For this category, indexation benefit is definitely available, subject to certain conditions. What are those conditions? The long-term capital gain should accrue only on account of land or building or both, no other asset. Number two, it should accrue only to resident, individual or HUF. So if you're a partnership firm, company, AOP, BOI, indexation is not available to you. You go in this particular category. Number three, the asset, the land and building should be bought before 23rd July 2024. Before 23rd July 2024, the asset should be brought before this date, and it should be sold on or after 23rd July 2024. So suppose you have an asset, land and building, which you purchased after 23rd July 2024 and you sold after 23rd July 2024, indexation benefit is not available to you. Indexation benefit is only available for the assets which have been purchased before 23rd July 2024. So this is sort of a grandfathering which the Income Tax Act sought to do for the people who genuinely feel the brunt of loss of indexation benefit, because their properties are purchased 20 years back, 30 years back, 40 years back, 50 years back, and they were hoping that indexation benefit is available for their property, and therefore they were not selling it for a very long time because appreciation was happening in the property. So just to safeguard their interest, Government of India had carved out this exception. Otherwise, this exception is absolutely not there for people who are going to buy properties after 23rd July 2024. That is the thing that is to be kept in mind. So now, if these four conditions are satisfied, number one, land or building or both. Number two, bought before 23rd July 2024, sold after 23rd July 2024, and that person should be a resident or an individual. If all these conditions are satisfied, only then you apply indexation and you give a tax at the rate of 20%, or you don't apply indexation and you give a tax at the rate of 12.5%, which is the tax rate which has been prescribed by the Government of India. Now it's your prerogative. Wherever you find benefit, wherever your tax computation is reduced, at that rate you can give your tax. Your tax liability can be computed. So I'll also write an or in between these two, because this is an option which is given to the assessee. But yes, these four conditions are required to be satisfied. Apart from this, no other asset would have indexation benefit henceforth. After 23rd July 2024, no other asset will have indexation benefit, apart from this exception which has been carved out to grandfather the benefit which has been which was due to people who have bought their properties long back. So yes, this chart adequately summarizes the new tax rates which are there for capital gains, and I've already told you the changes which have come by in the capital gain tax rate and tax structure. Okay, so got it. So now if you read it, you will be fairly clear about it. Short-term capital gain 111A, 15% is the tax rate. Short-term capital gain 111A, 20% is the new tax rate, effective from 27th July 2024. 27 July 2024. Okay, it is effective from 23rd July 2024. Okay, sir. Then long-term capital gain, earlier it was 10% and 20% was the rate. Now the long-term capital gain has been reduced to 12.5%. Although, for the specified securities, earlier it was 10%, now it has been increased to 12.5%. But yes, just to rationalize, just to simplify the long-term capital gain tax rates, they have come to a collided or common tax rate, which is 12.5%. So 12.5% LTCG without any indexation is to be given. Option of indexation, you can give tax at the rate of 20%, including taxation in the following case: LTCG on transfer of land or building to resident individual HGF only. Okay. The building can be residential or commercial. Very, very important point which is to be noted over here. The building can be both residential property or commercial property. No bifurcation between these two. Such asset was acquired on or before 23rd July 2024 and transferred on or after 23rd July 2024. So before 23rd July, you should have purchased this asset, and after 23rd July, you should have sold this asset. Then this option will be given to you. Okay, sir. So yes, this capital gain tax rate amendment was the major amendment which has come by, which is applicable to June 25 attempt and December 25 student, to all the CMA students. All right, now income from other sources. Yes, there's a small amendment. The standard deduction for family pension earlier was 15,000. Now it has been increased to 25,000. That is a very small change which you should remember. The examiner will be allowed to give you a 1 mark question or a 2 mark question, objective type question from this particular family pension for sure. There has been some amendment in the TDS rates. So up to 39th September 2024, the TDS rates were these, and now the TDS rates have been amended. These are the revised TDS rates. This PDF, I will be saving this PDF in the Google Drive in the link below. You can see in the description section, there will be a link. Okay, I'll save this PDF over there. You can download this PDF, take a print out and do all these amendments by yourself, and you'll be fairly done with the important amendments. All right, now let's come on to the amendments in the indirect taxation, primarily GST. So for GST, there are some significant amendments which have come by. I've also incorporated some old amendments which have come by last year, but I've incorporated because they are important. So if you have missed out on them by any chance, please watch this entire video. All right, first of all, let's talk about the reverse charge mechanism. Under the reverse charge mechanism, there has been some changes which have been suggested by law. Now, renting of residential dwelling. Okay, residential dwelling means a place where someone stays. There's a property which has been let out to family for staying, for anyone for staying. Okay, residential dwelling. Earlier it was exempt. Now the renting of residential dwelling to a related party, to a registered party. Okay, if your other person is a registered party, he's registered under the GST. Okay, if renting of residential dwelling is done to a registered person, if the person is registered, then under RCM, the registered person should pay taxes. This primarily covers big corporates who hire some boarding or lodging facilities for their employees or for residential dwelling purposes. They should pay the GST for sure, because the benefit of exemption was tried to be aimed at people who are, family people who are taking home on rent and they're doing some job and they are just, paying rent and living over there. So exemption was aimed at towards those people. So it was necessary to carve out people who are registered parties, who are registered persons, who have already taken registration under the GST Act. Those who are registered should pay GST under the RCM provision. So they have to pay GST under the RCM provision. Okay, one exception which is carved out in this particular case by the law is if you are a sole proprietor. Okay, because sole proprietor, the business and the sole proprietor both have common GST number. They have common identity, right? Since they have common identity, so even a sole proprietor who's a small sole proprietor needs to take GST, and he might genuinely, he might hire the house genuinely for his family stay. So he deserves an exemption. Okay, he's not a corporate who's hiring the house. Okay, he's an individual who's hiring the house for his family. So he genuinely deserves the exemption. So for sole proprietors who can prove to government that they are genuinely taking, although they have the registration, but they are generally taking the property for their own accommodation of their family and their own accommodation, they still get the exemption. Even when they are registered person, they still get the exemption. Okay, sir. Then residential dwelling, renting of residential dwelling to the unregistered person. If you are unregistered, like you and me, go somewhere, take a property and stay with our family. If you are unregistered person, then we are exempt from GST. So the idea was to exempt the common man, right? But in the garb of common man, even corporates, even big registered person also got the exemption. So it is withdrawn now. Okay. Now one very important thing, renting of residential dwelling to unregistered person, although it is exempt, but the exemption has been withdrawn or curtailed to things like hostels, things like PGs where students are staying, things like camps where students are staying in bulk number. Although students are unregistered person, but still guys, the exemption is not available to them. So it says exemption not available for students, residences, PG, hostels, camps, etc. given the following conditions are satisfied. If your following conditions are satisfied, then exemption is not available to the people who are running hostels. Okay, what are the exemptions? What are the conditions? Value of supply should be more than 20,000 per person per month. It should not be a small PG or a small accommodation. It should get a value of 20,000 per month per person. Then accommodation is given for a continuous period of 90 days. So it should not be a accommodation where students only stay for a short while, like 15 days. Like you have some training, like PPOP is there, right? And some person will make their home available for the PPOP students of CMA for staying for 15 days. Then that is not applicable. For them, exemption still holds good. Okay, and exemption still hold goods if your value of supply is less than 20,000 per person. Then exemption still hold goods. But if value of supply is more than 20,000 per person per month and accommodation is given for continuous period of 90 days, exemption is not valid. The GST is leviable under the reverse charge mechanism. Okay, sir, got it. Now we talk about renting of commercial property. The earlier amendment was regarding renting of residential dwelling. Now we talk about renting of commercial property. If we talk about renting of commercial property, then the earlier law was if related party rents its commercial property to a registered person or unregistered person under forward charge mechanism, the GST was required to be paid. Similarly, if unregistered person is required to is giving the property to a registered person or unregistered person, then also GST was required to be paid under the FCM. Okay, now the new amendment says that, what is the latest amendment? Says that if the commercial property is being rented from a related person to a related person or unrelated person, then of course under FCM GST is liable to be paid, right? That is a very valid thing, because the supplier is a registered person, so he should pay GST. He should be liable to pay GST. Now the question arises, when the unregistered person gives a commercial property to a registered person, when an unregistered person gives a commercial property to a registered person, then guys, again GST should be paid under RCM. Reverse charge mechanism, the registered party should be levied the GST. Why should registered party be exempt of GST? Because registered party is a fairly big party. I understand. Unregistered party is a small party. That's okay. But if registered party is strong enough to bear its own GST expenses and its own GST liability, then under RCM the registered party is required to pay taxes. And if unregistered person is supplying to unregistered person, then the FCM only the GST provisions will apply if the monetary limit is satisfied. If monetary limit is not satisfied, then the tax is not levied from unregistered person to unregistered person, which is fair. Okay, sir, got it. Then one very important amendment which has come by in again RCM section is, when there is a supply of metal scrap by an unregistered person to a registered person, RCM will be applicable. When unregistered person supplies metal scrap to a registered person, okay, then RCM will be applicable. Under RCM, the registered person must be liable to pay taxes. Now, what generally happens is, these big companies like Tata Steel, Tata Motors, they would supply their scrap to an unregistered person. So over here, registered person is supplying to unregistered person. In that case, RCM is of course not applicable. FCM will be applicable. But cases where unregistered person is supplying to a registered person. So suppose registered person is a big scrap vendor, like there's an online scrap vendor, Scrap Uncle. Yes, it's a website, full-fledged website which deals in purchasing scrap. So if Scrap Uncle buys scrap from us, we sell scrap to the Scrap Uncle, okay, then Scrap Uncle is liable to pay GST under the RCM mechanism, because he is a registered person. And that is how registered person are covered under the garb of GST if they are registered and under the metal scrap vendor list. Composition levy, okay, this is an earlier amendment, but a very important amendment. The composition levy was not applicable for people who are trading through e-commerce operators, but then e-commerce operators were allowed to, the people were allowed to sell on e-commerce platforms also if they were opting for composition levy. So very important amendment which you should take care of. Now, certain exemptions which have been included in the exemptions list which were earlier not there, important exemptions I'm discussing in this particular session. Services provided by Ministry of Railway, Indian Railway to individual by way of sale of platform tickets, facility of renting room, waiting room, clock room, services, battery operated car services. So guys, usually all the services of Ministry of Railways are exempt from GST, but these specific services were not specifically exempt. I mean, they were not stated in the schedule. So government has included these services also under the exemption category. So sale of platform tickets, okay, Ministry of Railway sells platform tickets. Retiring rooms, clock rooms, waiting rooms are there, services relating to them. Then battery operated car services, although I have not seen in any of the stations in entire country that they are battery operated cars. I've seen them on airports, not on railway stations. Actually, railway stations don't have space to drive a battery operated car. So I've not seen it, but maybe government's future planning is there that they will introduce battery operated car services. So that is again exempt from GST. Next is the service of affiliation. So your schools are affiliated by either CBSE board or ICSE board. That is how the affiliation is given from these boards to different schools. So this affiliation is provided by central government or state educational board or council to a school established by government. So if it is provided to government school, okay, then it is exempt. If affiliation is provided by CBSE to a government school, the affiliation charges are exempt from GST. But if the affiliation is provided from government, from CBSE to private school, exemption is not there. Very important aspect to be noted over here. So, service of affiliation provided by central government, central or state education board to schools established by central government, state government, union territory, local authority, government authority, or any government entity. This is exempt only in case of government schools, not exempt in case of private schools. That is a very important thing to be noted. All right, so the service of transmission and distribution of electricity is exempt from GST. Okay, as we already know. Now, there are some ancillary activities which are related to transmission and distribution of electricity. Government has now exempt those ancillary services as well. What are those? Providing metering equipment on rent. Metering equipment is provided on rent. Okay. Testing for meters, transformers, capacitors. Releasing electricity connection. Shifting of meters, service lines. Issuing duplicate bills, etc., etc. So government is saying that these are ancillary to transmission and distribution of electricity. Therefore, these should also be exempt. So they have been included in the exempt category. That is how the exemption limit has been expanded a little bit. All right, place of supply. Yes, another addition in place of supply definition. So as you are aware, if a retail outlet is supplying to an unregistered person, right? Then if address is there of that unregistered person, that should be the place of supply. If address is not there with the retail vendor, then the location of the retail vendor should be the place of supply. That is the golden rule which we always used to follow. Now, under this retail section, now things have changed after the e-commerce players have entered into. Now, there are no retail stores. Customers place order online and goods are received at their home. So very, very easy and efficient way in which e-commerce operators work. Same principle applies to the online placing of orders also, that if the address of the recipient is available, okay, then that should be the place of supply. Or if if it is not available, then place of the supply should be the relevant place of supply. Now, there's a catch to it. There's a complex situation to it, which has been covered by recent amendment. What is that situation? Okay, so that's me, Nikhil. I'm in Delhi. I have a very close friend. Yes, very, very close friend. Call her S. I have a very close friend who stays in Mumbai. Okay, I log on to the Amazon portal. I pay for some product and the billing address is given of that particular person who's in Mumbai. Miss S. Let's name her Miss S. So the payment is done by me, purchase is done by me, invoice is also issued in my name, but the delivery address is of a third person. Then in this case, what should be the place of supply? That clarifies that supply to an unregistered person using e-commerce operators, the place of supply should be delivery address of the recipient. So in this case, the delivery address is this Mumbai address. Mumbai address is the delivery address. So wherever the goods are delivered, that will be the place of supply. My place of supply is irrelevant. So it's not Delhi. Okay. Her place of supply is relevant, which is Mumbai. So this is a addition which has been done in the recent amendment. All right, block credit. ITC shall not be available for goods or services of both received by a taxable person which are used for CSR activities. So if you are, purchasing some goods and services for using it for a CSR function, CSR celebration, then ITC is not available for these products. Recent amendment is test drive cars. So test drive cars means, the car dealers. What is the role of car dealers? Car dealers would purchase cars and sell them to the ultimate consumers, sell them to the ultimate customers. And those cars which are purchased and sold to the ultimate consumers, the credit will be taken for those cars, right? Now, these dealers sometimes purchase cars not for further selling, but for demonstration purposes, just to show the features to the buyers, just to give a test drive to the buyers. For this purpose, the demo cars are purchased by the dealers, or manufacturers, give them at a concessional rate or whatever. Okay. Now the question is whether ITC is available for those motor cars or not, because typically for motor cars, ITC is not available. So law has clarified that if test drive cars have been purchased, used for demonstration of features, ITC is allowed on them. The reason being very straightforward, that they are used for business purposes for sure. These are used for business purposes and no other use is there. Okay, so ITC is available in this particular case. Okay, a few small amendments in the timelines. Due date of filing GSTR 4, earlier it was 30th April, now it has been expanded to 30th of June. Related person with aggregate turnover up to 2 crores are exempt from filing GSTR 9, the annual return for financial year 23-24. So if you are a registered person and your turnover is up to 2 crores for this financial year 23-24, you're not required to furnish GSTR 9. Okay, an important one. GSTR 1, details of invoices are required to be given. Okay, in case of unregistered person, supply to unregistered person, the details can be given in a consolidated manner if the invoices are below certain limit. That limit has been amended. Earlier, the limit was 2.5 lakhs. So if, the sales were up to 2.5 lakhs, then no individual breakup was required to be given. But if the sales are more than 200 person are more than 2.5 lakhs, then invoice wise detail is required to be given. Okay. Now the limit has been reduced to 1 crore. 1 lakh. From 2.5 lakhs, the limit has been reduced to 1 lakh. So now you will be able to give consolidated summary of all the sales which are done to unregistered person only up to 1 lakhs. Above 1 lakhs, you have to give invoice wise details of all the sales under GSTR 1. And finally, e-invoicing, and this is an old amendment, guys. E-invoicing, the compliance with e-invoice is mandatory only when your turnover exceeds 5 crore rupees. Only then e-invoicing is mandatory. Okay. So yes, these were the amendments which were come by in direct taxation and indirect taxation, relevant for your June 2025 and December 2025 attempt, guys. Quick time check. Very few months left. Less than 2 months left for the June 2025 examination. Now is the time to pull up your socks. Okay. Even if your preparation are not up to the mark, even if your preparation are not to the fullest, it's okay. It's okay. You do not want 100 out of 100 to qualify. You only want 40 out of 100 to qualify and 50 out of 100 for an aggregate. So don't worry, even if your preparation is not 100%, even if it's 60%, 70%, it's okay. Give it your best shot in the last few days and just see the wonders, just see the magic. So yes, on that positive note, the PDF is saved in the description box below. I've already told you. If you have any further queries regarding these amendments, please drop in your comments in the description box below. And yes, on this positive note, all the very best and happy studying.